Hello, traders. In this example, we are talking about trading slow, steady, long-term swings. On the bottom, we have the energy model based on planetary cycles, and that's the only way we can forecast forward using polar coordinates. So instead of just doing 45, 60, and all this, spending your lifetime on finding out which angle to use properly, we are going to use Wall Street money line. This money line is a strategical placement of the vertical lines offset to the dollar ratio, which means we want to stay on a monthly and a quarterly cycles a certain percentage away from the price in terms of trend line. In terms of statistics, it basically means that your standard deviation of your normalized returns. Normalized returns is the key because you have to retrend the cycle, you have to retrend the trend, and you have to take out the seasonality to find out the true nature of returns. And then you, based on that normalized returns, you do standard deviation and do all the mathematical functions around it to see where the relative value is for trading. Now that is how they use for pair trading. This is how they make money in all market conditions because they're doing pairs trading. They also do not get in out of the trends unless there's some strategy around finding out the sentiment change in terms of ISM and all these long-term solutions. So for long-term holding, either you go through all this fundamental analysis, you go through relative value analysis, sector rotation analysis, normalized swings in the markets and deviation of that, and intermarket analysis. You can do all this very easily if you know how to program in Python and things like that, but there's an easier way, and this way is what we are discussing. So here's the logic. You should have some forecasting model which you can trust, and you can invest in this cycle if you like to. This is daily chart of S&P. We'll take, so we have to first see which line is the one market is vibrating to. So here it was red line which did the top. This is yellow line. This is yellow line took the bottom. Red line took the bottom. You can see how these cycle turns are predicting the tops and bottoms very nicely. Now, this is for swing trading. So we know that we will use not this huge larger cycles, but these intermediate cycles which will go in phase, out of phase, they will shift. And this is how we will, now we know that we can trust these lines. You can see here, you can see here. So these lines, these red and these vibrations are pretty much dictating the market tops and bottoms. So once that has been verified based on your energy model, we'll draw vertical lines on the tops. Let's say we pick yellow lines. So stick with top to top because this is long-term swing strategy, not weekly. You want to hold it for 6 months. You want to hold it for 1 year. You want to hold it for 5 years. Well, nothing trends for 5 years, as you can see. It'll go whipsaw you a few times a year. But you can get on these big trends the way I'm going to describe this to you. So once the vertical lines have been placed, you can do it with red line. Now every market is going to be different. So you need to know your astrology planets for the IPO date. You need to know the intermarket energies from planet to planet, what energies are created, and then you, let's say Mars is active in this, and the mass strength, net strength in the chart for S&P is 36. So I will use that to predict my cycle frequencies. That's all it is. You can think about it, how you want to build it, or you can invest in this. Up to you. So right here, so when the market came down, this is exactly what I did here and here. So I'm going to show you in the live market, so we don't have to the same principles. So we will see this was the low, but we are not going to place our trend line on the low. We're going to place our trend line, which is going to be offset at the same distance, same price level, but starting from the vertical lines. That's why it is starting from here, because this is where I am predicting my cycle turns. As we can see, it can be red to red to red, red, top, 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 or you can do this bottom, bottom, bottom. Either way, it doesn't matter, because you just have to first visually see. I can see that these are working. That means these are usable for me. All right, so this is the starting point. Now, depending on if you want to trade, and if you entered here and you don't mind the vibrations up and down, but you want the drift to be upside, what you will have to do is you have to chase the tops, offset right here, tops, 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 and the trend line will never go down. It will only go up. It will be offset by one jump, top to top, or two jump, and you can see what is happening here. Almost 45 degrees, almost 33. You can see the idea what's going on here. So if I want to have just, this is what we call as money line, because if I just want to have 2% profit line, and I'll just raise the line by 22%. If I want to have 33% profit line, then I'll raise it to 33% if I want end of the year. Or you can also do a lot of support vector machines, AI forecasting. We are doing huge things, but you'll have some general trend, or you can do 1,000, 10,000, 20,000 simulations and average out the model predicted price, and then you can get a general trend. Or you can use some other bigger cycle for general trend. Once you have an idea, then what you can do is generate, the profit line. And you can say, I want to stay at 22% profit line range, so I will not get into any fluctuations. I will stick with that. All right, okay. So, but we are going to do something technical, because it's a lot of math. We are generating a machine which will have hundreds of programs for you, and you can download that machine from Docker. You'll have a full-blown machine running on your desktop, which is something out of the world is coming. We have built. You can do fundamental analysis with one program. It will print out all the 50 charts you need. Boom, one click. 50 charts for technical analysis, 50 charts for relative values, 50 charts for intermarket pair trading. It's all coming. It's already being coded right now. But in the meantime, what you can do is simple. Follow the trend line. So typically trend lines are drawn from like this, right? So the effective way of using the trend line is when it breaks and it touches and on the other side. This is one of the biggest secrets of trading. Trend line trading. Let it break and let it come back to feed on the other side. See that? Both of these trades worked out precisely. So where is this one? So that is typical trend line knowledge you can get. So what we're going to do is, since you want to have a slope based on how much we want to hold it for, we will slant it and offset it. That's the whole idea I'm trying to explain to you. We will not draw the trend line the way you're used to. So that is why we need these vertical lines for the future. So I'm offsetting everything from here, offsetting it to the next line or the next line. By doing that, I am changing the slope of the lines. Think about your Gann angles. right? So further away, vertical line I will use, slope is going to go down. That means I will be able to not whipsaw it. I will not do any whipsaw. I'm holding long-term stocks, ETFs. At the same time, I'm raising my line to capture the profits as they come. So this is the whole idea. So right now we are offsetting starting point from the low from this line starting point. And now I'm going to track the highs. Not on this line, next line, or the next line, or the next line, depending on how comfortable or how aggressively you want to get in and out. Okay. So I will use, let's say, two offset lines. I feel that I got the good bottom, I got in. I want to see until election year how it goes. At the same time, this is my stop loss line, profit line, whatever you want to call that. Okay. All right. So the way it goes, we got in here, it broke, we got in somewhere here. Okay. And then we are tracking the tops only. The line will never go down, it will only go up. The tops. The top was here, my line is here. As top goes up, and one thing is when the price is on the right side or it is, let's see this one. If it is here in this top to top box, you can offset the line to the next line if you want to stay in the trend longer. So you have to design your frequencies, design your slanting slope. Okay. All right. So top is here. So now the price got into this top to top. So I will say, okay, I will not use this next line. I will use next line. Got that? Okay. So this is the top right here, right here. But if it had to go down very aggressively, you could have. Now we are here, right? In one day it can go down, but remember we are trying to catch the trend and ride it as much as we can. So top is here, my line is here. The top is here, my line is here. Now what has happened? This top is here, we are still here. Now this price has entered into this zone. Either we can offset it to the next one, at the same level, same vertical level price, we are offsetting the line. So instead of doing it very aggressive exit, this would have exited you here on this bar right here, which is not bad. You got the ride, but you will say, oh my god, it went down and then it's going up again. So what do? Well, this is where the offset is coming into picture. When you get into this half line, you can offset it. So now what has happened? You got in here, market can never, it can only come down here. If it crashes one day like this, next day like this, right? This is your guaranteed profit. You locked in your guaranteed profit. This one is your profit. So more room you give it, more you can ride. At the same time, more you can also give back. So this is something what you have to decide. Okay, so going with the logic, market came into this two tops. I offset it myself. Oops. Sorry. All right, so I offset it myself. So if it is getting close to this two tops, I'm gonna, as we know, it's gonna vibrate. It's gonna be at the top here. We already know that it'll be top or the bottom here. So we know these frequencies are moving the market. So we want to stay away from the whipsaw. So this is what we can do. We can offset it. When we are here, if you are here, we can say, okay, the market has entered this zone. If you stayed here, no break. This is the break. So you're out here. Then you do something on the other side. Then you get, if you want to go that aggressively, and then you have to do aggressive here, aggressive there, aggressive there. You can do that too. Just like I was doing it here. Boom, boom. Which we can show you also. But anyway, so if you want to say, okay, I'm okay, I want to keep my profits. This is my profit. This line is the profit line. That's why we call it a profit line. When it breaks, you're out. So if you move it here, which if you're a long-term investor, then your profit can never be below this anyways, right? but you're still giving it room to breathe, go up and down. You said, okay, I will go here. So if you go here, two set offsets. If market goes down, how much are you giving in? So having this guaranteed profit, your profit will be at this level, right? So longer you stay in the trend, that what this basically means is the slope is dictating how much profit you want to take. So here profits were higher. Here profits were even much higher. Here profits are lower, but you're giving more room to breathe. Here profits are even more. Potential trend is there, but more room to breathe. So what we should do, we should stay at least one offset, which is required by the system, or two. And that should be, I think, good, because if you look at today's market, you don't trend. You always have like 2-3 whipsaws. Got it? So there we go. So this is your trend line. And unless this one breaks, now if market, again, same thing. When will we shift the offset? When we will have a rule. When the market price gets into this, which is, it is about to do it here in maybe a few days, in a week time, it'll let it go. If it breaks like this, you're short, or at least your profits are, you're out of the profits. Okay, since you're a long-term guy, so then you have to wait for the market to go up on the other side. We will do other one whipsaw a year. So market gets into this zone, we will offset it here. But we want to stay at least 1.5 to 2 strikes away to keep the profit. If it goes like this, let's say market goes like this, as is here, we will move the line up. We will move the line up. We are locking in the profit. This becomes your stop loss line. This is an effective way of doing trading, long-term trading. All the other things you're doing, it's not really, it's 50-50. How many times have you drawn your Mars lines, and how many times it really worked out for you? You draw two, one going up, one going down, one will work, right? So anyway, you can see. Okay, so let's do this whipsaw here quickly. So you get the idea, and you can do the same thing. See, this is what we are trying to catch. And in this whipsaw here also we are trying to catch this. So let's do this. First rule, draw vertical lines. First check which one are working out. Are these working out? Yeah, yellow. This is the red. Yellow. This is the red. Okay, so they seem like this frequency is still good, right? Because it will be. This is designed that way. So we know what the frequencies are, and they will never change. Now it may jump from one frequency to another frequency, but it will catch what you need to catch. Anyway, so what will we do in this case? So let's look at that. You can do the same thing on lower time frame, higher time frame, doesn't matter. Okay, so we come here. We have this bottom. So let's start from drawing quickly. Let's say we just want to stick with yellow lines. That's fine. Let's do this. We're creating an offset, some mathematical offset. You can do end of the month. You can do end of the quarter. You can do anything. You can come with some frequency which works first, right? Otherwise, you will be just not doing correctly. So we chose all the tops. All right, I'll do that, and then I will jump. Okay, so these vertical lines are just used for offset, as I said. Okay, so we already, since we can keep predicting this for next 100 years, that's why we can have 100 offsets done right now itself. Okay, so if you're starting from here, this is the pivot. We're going to project it from this line. If this is the pivot we want to use, if this is not the right pivot, that's fine. We project it from this line. I'm going to trace the high. So from here, I'll be tracing the high 1 bar out or 2 bars out. This is the high. I'm going to trace it on this line. This line has got into the half. Now this half is not happening here, so I will use the bottom one. So we got into this bottom to this one. I'll offset it here. So let's keep it offset of 2. Let's say we want to keep a longer term trend. All right, there we go. So market is going up and up and up and up, and I'm following it up and up and up. Now market got close here. What am I going to do? I'm going to move it. Close means right here between the red and the yellow, right here. I will offset it to the next one. So now market is still going up. So I'll go up and up and up and up and up. All right, got it. So if you are in this trend, and I think you got 2 months of profit swing. Now my line will never go down. Remember that. Same thing in the other same rules for the opposite direction. Market closed strongly here. You short it here. Okay, you bought some puts here. Got in the trade. Let's do the long ones. So short ones are the same on the other side. So same thing. Okay, now we got this pivot. It's going to be offset from here. We're going to track the highs here. Initially, it will be here. Market never went up below that, so this line is never going to change. If you want to do it from here, same thing. Now you see, if you do aggressively, if market is now this is where market is trending. Where if you're doing a lot of choppy decisions, you can go aggressive like this if you want, one step out. Or if your rule says, okay, I'll always now this is starting from here. This is half step, 1 step, so 2 steps, so almost like our step and a half out. Or you can do it here. Okay. All right. So if you did it here, you got short here. If you did it here, you got short there. Broke down, came up, got some short. Market is going sideways, which is fine. So now let's do this guy. This guy offset from here. You're tracking the highs on this guy or this guy. See that this one, this I'm tracking from this low or this high is being tracked. This high is projected on the next line. But market never went down. Market only went here, so it came down to the line and never broke it. If it breaks down, that's a exit or short. Okay, so market is now between these 2 red lines. I can offset it. Here. Market is again between these 2 lines. I can offset it. See that? So you got the point. So you want to use a specific pivot. This is the recent pivot. I'm tracking the highs. When market comes between these 2, see this one here, bottom. You will offset to the next one if you want to, you know, stay longer. So I want to see, can I get more? Now you can see these pivots are drawn very nicely. That means this line is valid. So I said, okay, I've been in the trade. So now how you get in the trade on the long side, we can do this on the other side. So we got in the long trade. I'll use this cycle. See that bottom? We got this bottom. We got this bottom. But anyway, you got in the trade. Use the same method. Now we are trying to stay as long as we can. Staying power we have. Once it breaks a new pivot. Once I'm out, I will look for a new pivot. Right? I have to get in first, and then I'll look for a new pivot. So there we go. So let's assume we got in here, and then we rode the market in a much decent, profitable way. So you're holding it for a month and a half. You're trying to take this huge runs. All right. So that is that. So now, as I said, once we have a new pivot, we will start a new offset line. Right here. Offset from here. tracking the highs from here. When market is here, it has to start going on the right side. So that means I have to use this pivot. It's on the right side. I have to use recent pivot. And this is the high, track on the next one. Market goes up and up and up. I'm tracking this one now. It goes up. I will never push it down. I'll always be on the top side. Got it? Okay. And you said, okay, maybe it's gonna go up based on whatever fundamental news you have. You want to be in the trade more, so you jump. I didn't draw this. Let's draw this one. So you can jump. You just all you're doing is locking in the profit on the next line. See that? Okay. If you're tracking this on this line, market came to the line. It comes to the line. If you're tracking it correctly, you are here. Market is top is here, right? Same thing with this guy. You're tracking this on the next line. Comes down to the line. Boom. See that how the trend lines are respected? There's a reason for that. There's a huge science behind this. Okay, so now you know this was the high. I'm tracking on this one. Market comes down and respects this line because these are the big players who are trading this money flow. They'll not get out of it. Okay, so right now we are here. Market went up. We're chasing the price now here, and then we'll offset to the next one. Why? Market came between these two red and yellow lines. I said, okay, this is pretty close. Let me offset it. I want to capture the profit. So if you got in here, you made another profit. Huge run. So you're capturing all the big runs in the market. So here, you can see the same thing. Market is here. We are putting it here, and you can see how the trend lines are coming. Respected. And then market came here. It went up. Okay, I will trace it like this. Right? So now you have to make a decision. You want to keep it here, or you want to drag it forward to the next one. So you have been in the trend for quite a while. If you want to take the profits, you can. If you want to say, I want to try my luck a little further to see if it may just go back up, which is fine too. So you go to the next line. When it comes here, you can go to the next line. So you can have two lines like these and say, okay, the two options I have is right here. I got in the trend. Got it. You gotten it here. As you can see, I've shown you how it is touching. These lines are touching very nicely for entry. Or you can, if you want to think the market is going to be bullish, you can simply get very aggressive line to line. Right here. From top to the bottom. This pivot offset. This is a pivot offset. Market breaks, I'll get in. So if you got in here and you got out here, you made your money. Right? $25. You're capturing the whole market profit. If you got out here, got in here, same thing. You already have the rules that market is not going to turn until this. If you got in here, exit here, right? Why? Swings are coming on these lines. So you can see the swings are coming on these lines for a reason. So this is correct mathematical approach. So the idea is pretty simple, as you can see. Just think through this and see how it works out. You can catch all the big swings and think about this as a stop loss line. You want to slant it for lower profits and longer time. You want to be in the trade, or you can go other way around. And if you want to really get a very aggressive, which is again, this is designed. This is designed for catching big swings. So this is the pivot. This is this pivot right here. Boom. There are the rules too. There are much more advanced rules too, which will get you precisely to the top. right here. But right now I'm just showing you the basic fundamental trend line done correct. It will break, come back to retest. That break, this is your entry. You will not be capturing this. You will say, oh, why not just trade this? We are not discussing that, right? We're not discussing that. We're discussing long-term hold. How the Wall Street does it. Right here, offset from here, offset to here, boom. If you want to get aggressive. Same thing here. Take this pivot. If you want to say, hey, I just want to be very aggressive on the long side. I want to be aggressive on the short side. So then you have to pay for it too, right? So now we cannot. So there we go. Maybe I will use this one. Why? Because I need to have some confirmation that this is good one. So if it is breaking, like here, if I start from here, it is confirmed. And the line has to be on one of the lines. If I put it here, you can see you got out. Now here's here's the funny part of it. If you got in here, how will you know to get in here? Market is here, it's going down, right? And you have to catch that upside move, not using the bottom oscillators. So you have to have the bottoms tracked now, right? From this top, track the bottom on the next line. Next line, track the bottom. This bottom tracked here. Track the bottom. Track the bottom. Track the bottom. Right? Track the bottom right there. So now you know that this bottom, which is being tracked here, market hit this line and came down. Very beautiful trend line trading. And this is on the top. So cycle is coming. Boom. But we want to trade long. Right? So with this line has to be broken now. This line has to be broken. It broke here. Go long. Right? There's 3-4 different combination of how aggressive you are. What I showed you is to try to get on the bigger term trends. Okay, so once you get on the trend, this is how you can stay in the trend. Okay, so market went up, we're not moving the line, market came down, 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 now we're moving it again, down, down. We're trying to capture the entry right now here, right? Tracking down, it's not gonna go up, getting down, tracking down. Okay, so this low, and then this bar looks like this now, but when we're doing it real time, we're tracking the lows. This low, next low, right? And this is where it is broken. This is where it is broken. So you go long there. See that? So you can get that aggressive if you want, which is fine. Up to you. Once you get in aggressively, then you want to stay in longer. So now if you had taken non-aggressive approach, okay, so market went down here. You were thinking about, okay, market is going to go down now because of what we're doing. So we're going to track this downward movement and stay in the downtrend. Same thing, we did it. So we got in here. This is the tracker. Go to offset, track the low, track the low, track the low. I'm tracking this one, right? Low, 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 low. Now it came close. I'll jump into the next one. So I think it has more power to go low. So I'm tracking this low now here. So what happened here? It broke. So I got in here. I have to get out here with $25 profit. So you can got this 25, you got this 20, 25. You can keep on getting this. Now this is a different long-term strategy, right? Now this one is definitely break. So you were offset. Okay, so you're not offsetting until it got here. So you already broke before that offset area. So this is where we're not moving it. So we boom, long. So now we are long. Now you have to track on the other side. This is offset. This is offset 1. This is offset 2. So we can offset here. Now this will be a small loss. We went long here. Break of this, we went long. Did not catch too much, but this is fine. That's why you can put your 50 days, 200 average and all these things. So anyway, so we got that. We stopped out. So if you were offsetted by this guy, then it was a different story. So here's this is where we went short, and if market is here, we want to be offset by here. This will be aggressive long or exit short. We are done with the shorts. We get out of this. We buy long calls, and if we had gone instead of doing this, staying away with a much sloper slope, then we were here. See that? So this is where you have to really decide if you want to be in a longer term slopes. As you can see, I would love to have 2 steps out always. We started from here. We were out here. Market got into this box. I will jump off if I got that shot. So I don't know this is going to happen. I don't know this is going to happen or not. I mean, we can know that. We're using Searle. From the price, we can project the Searle 3 points. We know that. This could be 0.1. This could be 0.3. Searle has 3 waves. This has nothing to do with Elliott waves. This is energy. This is a pure energy, free energy. So here, either way, this was, you got out. This one was a loss. So now, if you were here, as this is slanting, now what are we going to do? We're going to long here. Now we have to track it on the other side. So this is the long line. But how we have to track it? So we are already here. So it has to be done from the bottom. Offset here. So, come on. Okay, so this is the offset. And we're tracking into the next one. Market is here. We went long here. Came down. Obviously, you're going to be stopped out on that one. We can use this one too. Why? Because it is still on the left side of the line. Still on the left side of the pivot. This is still valid pivot. So you're long. A market going down. So I will see. Okay, this is a bearish Arami, and I saw red bar. I said, okay, let me see. I got to get aggressive. You know what I'm saying? So I will say, okay, what is my loss area? And if I do this one, where is my max loss area? I don't want to take much more loss than this. And so they got it, right? So you have to take a decision. So a rule says stay away. The rule will keep you here. And then you went long here. Came down. Stopped out. So the question becomes, will you stop and reverse, right? That's the question. So you went calls here, came down. In 3-4 days, if you are a month out, you probably were down 5% on the call. So you spend $500, you'll be down $50. 25, 50 bucks, because it not only lost your value, but you have vega is higher, you may lose less than that because volatility is going down, volatility is going up, your options are holding value. So when market comes here, it breaks again, right? And then it goes back to retest it. So at the same level, so I will short here. And I have my oscillator with telling me it's gonna, some reversal is coming, so I will short here. So whatever I had to make here, I made it on this side. So if my entries are coming very on aggressive lines, which is these ones, like 75 degrees, 65 degrees, then I have to get aggressive also on the exit. And this is where the aggressive behavior comes into picture. You can also draw aggressive entry and exit on a sub-cycle. Instead of doing yellow, yellow, yellow tops, you can do one red one. So you can come here. Now, what does that tell you, right? So if you were not sure the long is going on or not, or you're concerned about it, or you have a method, or you put some oscillator here or something. I'm just doing a pure trading here based on just cycles. So I can say, okay, I want to, initially when my thing is going on, I'll give some room. If you don't want to give it a room, you want to just trade very aggressively, you will say if it goes here, since you're looking at double top, coming in, then what you can do is if it doesn't take off to test this top, well, you have to reverse it. Market breaks down here, you reversed it at the same point. So this is again all driven by these lines. If you want even more aggressive things, you can see here, I can compress my lines further but I have to keep the peaks and troughs. I can do this red one. Oops, it shifted. So you got the idea. What are we trying to do here? So we are trying to slant the line in different directions based on how aggressively you want to trade. Let's do this last one. It's been almost half an hour, more than that. So okay. So I'm gonna take one line, offset from here, track the low. Because market is bullish, we want to go aggressively entries in the long side. We can do that right there. If you want to get more aggressive, you can take this yellow bottom also. It has to first break and then retest itself, and this is your entry. It can go down too. This is fine, but that's how the trading is. All right. Or this is your proper entry. When it goes up, you will say, oh, I could have gotten the top by this wave itself. We're not talking about wave trading entries here. We're talking about pivot to the left. This is the pivot to the left. You can put zigzag. Then there we go. You can put it on the bottom. Same thing. It will not have, if you want to be super, a market is dropping like this and you want to catch the falling knife, you can get aggressive like this. Slant the slope, offset, right? You can do a half cycle right here. Full cycle, half cycle. Market breaks, comes down to test it. This is your entry. And then you keep on overriding the wave. Keep tracking. I'm just gonna not draw it, I'll just go like this roughly. I'll ride the wave. I'll ride the wave as it is going up, right? It's gonna go up. Now you can see this is why I'm tracking this high on this wave. It is pinpointing the re-entries. That shows this method is extremely valid. Then I jump on this one. I track my highs. Now this high, now it's been almost like 2.5 months. So I'll take my profit. So I took my huge profit here, almost $40 on S&P, 400 points on SPX on daily charts. And if you want to try your luck and say, okay, maybe I should, market is coming here, is in the zone, let me just move it to the next one. So there we go. So you move it to the next one. right here. Now this is obviously a little subjective because but the rules are not you want aggressive out exit or you want to stay in and you're playing for the long term. You will have some whipsaws, but you will catch the entire move. That's the whole idea. And then market is coming here. Right now we are here tracking on this. Now market is coming into this zone. We are here. You can say, hey, let me suck more profit out of it. Well, then we go on to this line. So I think you got the idea complete. Free training I gave you. And the question is, which frequency are you going to use? And now you will say, okay, man, I've been in the trade for 6 months. I sucked up entire 600 points or some profit or options or spider ETF. This is how you do it. So I hope you enjoyed it. And question is, I will recommend come with some energy models which is working, which you can detect your pivots, and then you do this methodology. If you don't have the system, you can maybe come with your own ways to do it. But you should be able to forecast it forward. Unless you're able to forecast it forward, just like we are, it'll be hard for you to come with these money lines and finding out these precise entries which we showed you. How the trend lines, if tracked correctly with the offset, you can see it gives you why market is stopping here. Anyway, thank you very much for listening, and I hope you enjoyed this free training. And if you need this indicator, you can email, subscribe to a channel, and respond to a channel and see if you are interested in investing in this or not. And email is trading with Alex at gmail.com. Thank you very much.